knowing the construction and the creation of the financial statements is not enough for us to make good and sound financial decisions regarding our business. We need to know how to analyze and how to interpret the financial statements. And that is what we are going to learn today. So financial statement analysis is gaining an understanding of a business's financial situation by reviewing the financial reports. The financial reports being your income statement and balance sheet mostly, since the balance sheet and the income statement will go through most of the analysis that we're going to perform today. The cash flow is not going to be used for the analysis. But the financial statement analysis analyzes the financial statement so that we could use them for decision making purposes. Because the first part of our course, the introduction to financial management, focus on the financial decisions, dividend decisions, financing decisions, investing decisions. Now that we are here on the financial statements analysis, we are going to use all of the data from the financial statement so that we could come up with the financing decisions that we need for the business to prosper. So we have three techniques mainly in financial statements analysis. We have the horizontal analysis, the vertical analysis, and the ratio analysis. We'll start with the horizontal analysis. The horizontal analysis is a comparison of year-to-year data. It is also known as the trend analysis. It is denoted in percentage and it gives us the yearly growth or the period-by-period growth of the amounts within the balance sheet or the income statement. The formula is A minus B divided by B times 100, where A is the current year amount, B is the base year amount, and X is the horizontal analysis value. So we multiply it to 100 so that we would get a percentage value. For example, let's have this balance sheet and let's analyze it. So the base year is the first year always. So in this case, the base year is we have 2019 and 2020. Our base year is 2019. So for every account that we are going to perform a horizontal analysis with, we are going to have a very different base year. It's not just a singular one size fits all situation. So for example, in cash, our the value for B is 212,000. For accounts receivable, the value for B is 60,000. For prepaid expenses, the value for B is 71,000, and the value per A is on their current year. So in this case, it's on the 2020 amounts. So let's solve for one. Let's solve for the value of accounts receivable. So first, we identify the value. So we need the base year, the current year. We supply them. So the value of accounts receivable, the value of A, meaning the current year, is 45,000. The value of B is 60,000 because that is the base year. So 45,000 minus 60,000 is, how much is the value? 45,000 minus 60,000.
Negative 15,000.
Negative 15.
Negative
Okay,
15, sir.
we have negative 15,000. The negative 15,000 divided by 60,000.
Negative 0.25 po.
Okay, we have negative 0.25 times 100 is 25%. So that is the value for the accounts receivable. For all the other values, we have for cash, it's 25%. Prepaid expenses is 31%. Transportation equipment, 50%. Depreciation is 241%, and so on and so forth.